and then we want the streaming as well to kick off so that people joining from YouTube will not miss. Hello, Mr. Tope.
Yes, sir. I can hear you, sir.
Okay. Are we good to go now? Okay. We can go ahead now with the class.
You can continue, sir.
Okay. Good evening, everyone.
Good evening.
Good evening.
We are welcome to our third. Okay, this is the fourth PSAP class, I guess. I believe, or even the fifth. This will be the fifth class. I want to believe that we are trying as much as possible to be following up with the classes, not only PSAP, with other courses as well. Please don't let us compile it till it will be too much for us. As we are taking the classes, let's be taking our time to go over them. God will help us. Amen. So, good evening once again. My name is Abdulaziz, as you have known me. And tonight we'll be going through two important parts of the syllabus. Before we move too much ahead, I want people to confirm if my audio is clear enough.
Very clear, sir.
All right, thank you. Okay, good. So we'll be looking at two important aspects of the syllabus today. One, we'll be looking at public sector audits, that is how audit is done in the public sector. And secondly, we'll be looking at the ICANN Accountability Index. This is like a follow-up from what we did the last class where we talked about transparency and accountability. So the reason why they are important is that the public sector audit aspect is somewhat a kind of a regular a feature in past PSAF examinations. So it's important that it's not something more, the chapter is not bulky, it's not voluminous, but it's important that we have it with us just anytime it comes once in a while like that. And then the other one, which is the ICANN Accountability Index, is a new entrant into the syllabus. And I see it as something very important that it might be an examination area, because this particular topic is ICANN's own baby. The topic it belongs to ICANN themselves. They created they developed the accountability index, and it has been developed since around, I think, 2017, thereabouts, and they have not added it to their syllabus. So this time around, they decided to include it in the new syllabus. And if they do that, you can be sure, you can be almost sure, you can be sure, you can be almost sure that they have something to do with it. So it's important for us to also have it at our fingertips while we are going to the exams. All right, so let's begin in earnest. So the ICANN Accountability Index. Okay. All right. So is my screen bold enough for us? Okay. So the ICANN Accountability Index was developed in 2017, as we said earlier, as a public finance transparency tool. And what we mean by this is that ICANN want to use this tool to test annually how transparent are different governments in Nigeria. And the name is the ICANN Accountability Index, or in short form, the ICANN AI. Now, what is the structure of this index? How does it look like? The index is built to be in 3 parts, and it has the pillars, it has the indicators, and then the dimensions. And the pillars are 5 in numbers. The indicators are 25 in number, and the dimensions are 70 in numbers. These the pillars. The pillars are the main categories of the index, the main categories of the assessments. So the pillars are expanded into 25 indicators. Each pillar has about, some have 3, some have 4, 5 indicators. And then the indicators are then broken down into specific dimensions to test the transparency and accountability level of different governments in Nigeria. Now, what this thing does, what this tool is being used for, is to see how governments levels in Nigeria, the state government, the local government, and the national government, how they perform in the area of ensuring accountability with their budget process, with their reporting process, with their audit process, and even with their asset management process. So the structures. So the structure of the pillars, the structure of the index is of the pillars are one, the policy-based fiscal strategy budgeting. We also have the budget credibility, the management of assets and debts, controls in budget execution, accounting and reporting, and then external audit and legislative scrutiny. So it is these pillars are the categories that they use to test the transparency and accountability level of government. And they are used to measure different attributes of transparency and accountability in the public sector or different levels of government. So the measure attributes such as availability of information, that is how these governments are open in area of giving releasing information about their governance, about their finances to the public. Compliance with audit rules, how are they complying with the rules and regulations guiding financial reporting and auditing? And even the quality of their audit report. Are they just producing anything, or they're producing something meaningful, something tangible and quality? So these are the attributes that this index aims to measure. And these pillars are expanded into, like I said earlier, 25 indicators. Now, some of these indicators are something like the alignment of budgets with fiscal strategy. So how does the budget aligns with the fiscal strategy of the government? Every government have a fiscal strategy paper. Like it's a document that states the strategy of that government in their finances. It talks about their tax policies. It talks about their debt policies. It talks about their revenue policies. So that's what the fiscal strategy paper looks like. It's also, some of these indicators also include accuracy and frequency of budget execution reporting. So testing how accurate is their budget execution reporting. That is, how correct is the report on their budget execution. When they execute their budget, do they give reports at all? Now, if they give report, how correct is the report they give? And how often are they even giving this report? Do they give it just at the end of the year? Do they do it quarterly? Do they do it half yearly? So these are the indicators that AI tests. Some it also include timeliness of audit reports. So does the audit reports come on time in order to ensure, to see that this government is transparent and accountable? The audit report need to come on time. Is one of the attributes of financial statements, like we know, like we must have learned in our financial reporting, is that timeliness. One of the enhancing characteristics of financial information is timeliness. So it has to be timely. So AI is also testing this in different levels of government. Accuracy of revenue and expenditure forecasts. When they make revenue and expenditure forecast, and then at the end of the year, when they report about their budget, do they actually meet up with that forecast? Some governments have the habit of preparing budgets with bogus revenue estimates, just for them to be able to say that, okay, they have a big budget for the coming year, so that they can look like the government has a big plan. But in actual sense, their revenue estimate is just bogus. It's not scientific. They don't have specific plans to generate those revenues. So ACTI is also testing in that area. Their debt management discipline is also being tested. The strength of their legislative oversight on audit findings. So does their legislature have the responsibilities of working on the audit findings, or the reports that are submitted by the Auditor General? Does the legislator act on it? So those are things that the ICANN AI test. So it also has 70 specific measurable dimensions, like we said earlier, which includes the frequency of their reporting, the disclosure in their procurement details. You can see that these issues are issues that some government will keep secret, but I can want them to disclose it, so that as attributes of being transparent and accountable to the people. So they are testing all these things. So when they do all these things, when they test all these attributes in their financial reporting, in their budgeting process, in their audit process, in their asset management and investment management process, in their debt management process, when they test all this, they rate each government that is tested. And when they rate them, they also rank them at the end of the day, especially the state governments. They rank them at the end of the day, and they award the states with the best ratings, as the first, the second, third are awarded as being excellent. Then the fourth to the 10th position are awarded as being good or something like that. And then the remainder are awarded as being fair. Also, we can have those that are poor as well among them. I think the last three are usually awarded as being poor. Now, what is the role of this? The role of all this in the public financial management and accountability? What role does this AI play in public financial management? Okay, so the role is that this document makes the government in Nigeria to be on their toes. It makes them to be on their toes because they want to be on a good rating. So it pushes them to be on their toes. For example, when the ICANN started this around 2018, when they started using it, the level of information disclosure by different governments in Nigeria was less than 20%. But by the time it reaches about 2021, by the time it reaches 2021, the level of information disclosure of Nigerian governments at different levels was as high as over 53 or 60 something percent. So because they want to be on a good rating, and of course, ICANN is advocating with different international organizations, especially the donor organizations like World Bank, WHO, and so on, to adopt this index and begin to use it in rating different governments in Nigeria in the area of grants giving, in the area of loans giving, and so on. So by the time this is accepted by maybe World Bank, and World Bank begins to use ICANN AI as a tool, as a parameter to rate state governments or local governments in giving them loans or giving them grants, then it will even be more recognized, and people, different governments will now respect the index more. So one of the roles that this tool play in the public sector financial management is that it encourages transparency and inclusivity in budget process. So the governments are no longer doing budget in secret. They now make it open. They now make it inclusive. They involve the public. They organize public hearing. They organize public hearing, and and so on, so that we can now have a more transparent budget process. Apart from that, there's as the tool also assess whether government budgets are prepared in accordance with fiscal policies and long-term development goals. So by testing the relationship between the budget and the state development plan, the state's fiscal strategy documents, the state development goals, and so on, it makes the government now prepare their budget in a way to align with their set goals. Every government have already prepared a development plan of about 10 years. So those that doesn't even have the plan in place before now are preparing it. So, and they have to prepare their budget in line with this. So the impact of this is that it will now reduce politically motivated budget practices. So they will not be budgeting just by the whims and caprices of the politicians. So the politician, a governor or a local government chairman will not just come and say, this is the area I want to focus on, this is the area, this is the projects I want to do. Hey, the government, the states already have a development plan. We already have a strategy document, and our budget are supposed to be in line with this. So these are things that the ACTI AI is testing. Another role is that it monitors the variances between budget and actual revenues and expenditure, and then it assesses whether budgets are implemented as approved by the legislature. This will now lead to a better compliance with the fiscal. My network is breaking. Is it only yours, or is everybody experiencing the same thing, please?
Me too, my network is breaking.
It's stable from my own end there.
Okay.
It's stable here.
Stable here as well.
It's stable here.
Okay. All right, thank you. So this will result in budgeting based on realistic revenue and expenditure. It also promotes fiscal discipline among the different levels of government. So in overall, this will lead to better compliance with the Fiscal Responsibility Act. I think the one other tutor have taken you through fiscal responsibility in public sector, the Fiscal Responsibility Act. So none of these, it will lead to better compliance with that act, because by the time public sector organizations and public sector officers are following budgets in line with how the budget was approved, because they don't want to be in the wrong rating on the ACTI AI, then it will lead to them following that act at the end of the day. It's the index also monitors how governments manage public assets. It evaluates their debt management strategies. Apart from that, it assesses their quality of the quality and timeliness of their audit reports. So not that government are just producing audit reports, or some are not even producing at all. It monitors those that are producing, how quality is their report, how timely is it, and is it being overseen by the legislature. Now, is the legislature acting on the recommendations of their audit report? By the time the auditor prepares reports, when the Auditor General audits the accounts of the government and prepares the report, there will definitely be some recommendations. There will be some things they will say, okay, these are not being well done. So these are recommendations that areas where improvements need to be made. And so the legislature who the audit report is submitted to will need to act on it. So the index monitors whether the recommendations in the audit report are being acted upon, are being followed up by the legislature. And this will now lead to not just the Auditor General producing quality reports, it will also lead to the legislature doing their work, doing their functions, performing their responsibilities as and when due. Financial stewardship will now be promoted in the public sector. So those are the roles that the ICANN AI is supposed to serve in the public sector financial management. So overall, this index has improved the public financial management behavior of different levels of government in the country. It has improved their level of compliance with different regulations and laws, and that's improved the level at which information is being available to the public about public finance of different governments in Nigeria. And like I said before, ICANN is advocating with different organizations to also adopt this AI in their dealings with different governments in Nigeria. And some of the international organizations are already endorsed the ICANN AI, including the DFID, the Department for International Development in the US, including the IFAC, that is International Federation of Accountants, including PAFA, that's Pan-African Federation of Accountants, and others as well have endorsed the ICANN Accountability Index. So, do we have any questions? Any questions so far? Before we now move to the next topic.
Sorry, my question is, sorry, I joined late. I just want to know the topic that we're talking. Please, sorry.
Okay, the topic is like a rejoinder to one of the topics we did last week, Friday, which is transparency and accountability in the public sector.
Okay, sir. Get it. Thank you.
Okay, any other question? Let me see if there's any issue on YouTube. Okay, the notes will be sent to the group after the class. I can see somebody is asking for the notes. All right. Okay, the meaning of PFM. PFM is public financial management. Public financial management. Okay, so since there's no question, maybe we should move to the next topic, which is public sector audits. So when we are talking about the accountability index now, we have been mentioning the audit reports, okay, recommendations from the audit reports. So which is an indication which shows us that there is actually audit reports. I mean, audits actually happens in the public sector. Okay, hope we have it together. All right, so public sector audit. Can somebody tell us what audit is? Can somebody tell us what audit is? I know we have auditors in the house.
Audit is an independent examination of financial statement to express opinion.
Okay, good.
Expert opinion.
Okay, good. Independent examination of financial statements and express of expert opinion. Okay. Any other person want to say something different?
Okay. Audit is an examination of the accounting record to drive at audit opinion.
Okay. Examination of financial records. Okay. The two are very good definition of audit, because the two definitions gave us two different things that audit does. So I really appreciate your. Okay, audit is systematic examination and evaluation of an organization's financial. I'm saying this to the end.
Audit. It's an independent investigation of financial statements, expressing an opinion as to whether the financial statement conforms to the given rules and regulations.
Okay, good. Thank you. Okay, so which means we know what audit is. Fine. That is involve examination of financial records, assessment of financial statements, then giving of opinion or reporting. Okay, so as we know, audits also happen in the public sector. So the way audit happens in the private sector, audit happens in the public sector. In fact, in the public sector as well, there can be no expenditure. No expenditure can happen without passing through the audit process. And of course, like we have mentioned earlier about ICANN Accountability Index, that the index assess the quality of audit report. So which means it is expected as well that every government is supposed to have a financial statement at the end of a financial year, and the financial statement, not just financial statement, it has to be an audited financial statement. And this financial statement will now be, it is what the ICANN AI will now be assessing. So if the government does not even produce, is not even producing a financial statement, in fact, those ones are even beyond assessments. Okay, so when we now say there is auditing in the public sector, how does auditing in the public sector looks like? So that is what we'll be briefly looking into for a few minutes. What is the legal requirement? What's the legal requirements for public sector audit? Why is audit in the public sector necessary? Why should we have, what is the law that backs audits to happen in the public sector? And we can't find it nowhere else than in the Constitution of the country. The Constitution of the Federal Republic of Nigeria 1999, as amended, provides that the account of all government organizations should be audited by the Auditor General for the Federation, or the Auditor General for the states as the external auditor. Normally we have internal auditors who are resident in each organization, but the external auditor to every organization will be the Auditor General for the Federation, and shall undertake the audit of all accounts of the Federation and of all public offices and you submit the reports to the legislature, that is the National Assembly or the State Assembly, as the case may be. All right. So this is where the Auditor General for the Federation draws its power. You know, I mentioned it when we were talking about the financial responsibility of public sector officers. When we talked about the Auditor General, we said he is a very powerful officer because he draws his powers, his responsibilities. He draws them from the constitution of the land itself. So the office is not just created. It's not an office that one president can say, no, in during my own tenure, I don't need the office of the Auditor General. You know that there are some offices that the president can say, we don't need it in our own regime, like the ministries. Like one good president can say, I don't need Ministry of Works. We cancel Ministry of Works or merge it with Ministry of Special Duties. One president can say, I don't need Ministry of Communication, and you know, appoint Minister for Communication, and then you can merge it with Ministry of Internal Affairs or whatever. But this cannot happen to the office of the Auditor General because it is enshrined in the constitution of the country. All right. Some other legal requirements that affect auditing in the public sector are also enshrined in the financial regulation, the document that's known as financial regulation in the public sector. Also, in the public sector, there are organizations known as government enterprises, or known as parastatals, or public corporations, public enterprises. These organizations are created by law, by their own laws. And these organizations, one of the peculiarities that they have is that their accounts are not audited by the Auditor General. These are only the ones that the Auditor General does not audit. But despite that it does not audit them, the Auditor General also plays a role in how these agencies are audited. How? These agencies are audited by external auditors, private external auditors, and these private external auditors will be appointed by the governing board of those parastatals based on recommendation by the Auditor General. The Auditor General will recommend maybe 3 or 5 private external auditors to them, and then they will choose from that recommendation the auditor that will be their external auditor in that organization. Nevertheless, however, the Auditor General, even not, despite that he doesn't audit the parastatals, he has the powers to check into their accounts. He has the powers to view or to examine their accounts at any time that he deems necessary, or send his representatives. All right. There are also some declarations by International Organization of Supreme Audit Institution. This is an organization of all Supreme Audit Institution. When we say Supreme Audit Institution, means the head, the most senior audit institution in a country. And this organization is known as International Organization of Supreme Audit Institution, in TOSI. So they made some declarations on public sector audit as well in many of their international meetings around the world. And one of it is that for audit in the public sector to be effective and objective, the Supreme Audit Institution, that is the most senior audit institution in the country, must be independent of the audited entities and must be protected against outside influence. I believe that statement is very clear. For there to be an effective audit, the institution that is doing the auditing must be independent from the offices, from the entities that they are auditing. So that will be clearer in a few paragraphs down when we talk about something very close to that. Also, another point is that the establishment of the Supreme Audit Institution and the necessary degree of independence of that audit institution should be laid down in the constitution of the country. So for there to be an effective audit, for the audit institution to be independent, their powers, their establishment, and of course their level of independence should be laid down in the constitution. And that is why it is the Constitution that is establishing the Office of the Auditor General of the Federation, including the procedures that will be used in appointing or removing the head of that institution. So it shouldn't be an office where the president can just wake up one day and say, I don't like the face of this Auditor General, remove him, he's disturbing us. Or one minister will go and tell the president that, you see that Auditor General is giving us tough time, maybe you should remove him. And then the president say, okay, go and remove him. Okay, so another declaration is that the Supreme Audit Institution will not, shall also be granted necessary financial autonomy. And if possible, they should draw their budget directly from the national budget. They should not be waiting for the president to approve fund for them to carry out their operations. They should have a financial autonomy, thereby even when the allocation is being shared, their own would have been shared for them independently without waiting for approval of president to approve fund for them to do one thing or the other, so that the Auditor General will not want to train his staff, and then you have to write a memo to the president and be waiting for the president or the Minister for Finance to approve the fund for them. And then if those ones doesn't like the way has been operating, has been disturbing them before, and they'll say, this is the time to get him. Maybe he has been proving that he knows everything. He has been disturbing us. He has been giving us tough time. This is the time to deal with him. We will not release funds to train his staff. Okay, so the INTOSAI is saying that supreme audit institutions in the country should have financial autonomy. So the Supreme Audit Institution should also have the right and obligation to report their work. So they should be free to report their work. This is also a branch of their independence. So they should be free to report their work without fear of being intimidated or being molested or whatever. And they should be free to decide the content of their report and the timing of their reports. Not that somebody will be giving out orders to them, will be telling them when to and when not to give reports, or what to include and what not to include in their reports. It is in this case when we have all these items and so many more, there are many, that we can now say that the Supreme Audit Institution is independent, or that the Supreme Audit Institution, or that we can have an effective and objective audit in that country. So let's look at briefly the Office of the Auditor General for the Federation. And the appointment of the Auditor General for the Federation is also enshrined in the Constitution. Just like this is the Constitution that established that office. The Constitution did not just establish the office and say there shall be Office of the Auditor General to carry out to be the external auditor. No, the Constitution went further and enumerate how the Auditor General shall be appointed. So in section 86 of the Constitution, it says the appointment of the Auditor General for the Federation. In section 86 of section 2 provides that the public sector, the public service of the Federation will include the Office of the Auditor General, and the appointment of this Auditor General will be made by the President based on recommendation by the Federal Civil Service Commission, and then subject to approval or confirmation of the Senate. Please, whoever is disturbing us should mute their mic. Oh, thank you. Okay, so the auditor, which means the Auditor General, even though is going to be appointed by the President, it will be based on the recommendation of the Federal Civil Service Commission. The Civil Service Commission have a board, they have a commission, they have commissioners that are appointed from different parts of the country, and then they have a chairman, so they oversee the affairs of the public service. And then, so they will be the one that will recommend, and their recommendation is usually based on seniority in the Office of the Auditor General. So when one Auditor General retires or leaves office, the next most senior director in that office will be the one that will be entitled to that office to become the next Auditor General. So it is that person that the Federal Civil Service Commission will now look into the person if he's free of any issue that may make them not to make him the Auditor General. If it is free of all those ones, they will recommend the person to the president will send the person's name to the Senate, and if the Senate confirms it, then the person becomes the Auditor General. So that is what the process that the Constitution have laid down. And once the person is appointed, the tenure of office of that person will be until the person retires. That is, until he fulfills the retirement requirement in the public service, which is, we all know, is 60 years old of age or 35 years in the civil service. So once the person reaches 35 years in the civil service, the person will retire and then he will automatically leave the office, or he reaches 60 years old. So what this means is that if somebody is 45 years old and he happens to be the most senior director in the office of the Auditor General, and he has just spent maybe 20 years in the civil service to reach that level, and then they appoint him as the Auditor General for the Federation, he's going to be there for like 15 years till his retirement point. That's the rule that the Constitution have stated in section 86, subsection 4, precisely. Also, now, there may be cases where the Auditor General can be removed. So how can this happen? It's not by the whims and caprices of the president. That the president just say, "Shebi, I'm the one that recommend you to, I'm the one that send your name to Senate to appoint you. Oh yeah, remove him back. I don't want him anymore." No, it doesn't happen that way. The Constitution also states in that same section, subsection 5, that for the Auditor General to be removed, it has to be as a result of misconduct by that Auditor General, or is unable to continue to perform the functions of that office, probably as a result of infirmity of mind and body. He cannot perform the functions of that office anymore. Then the president will not just say, "I've removed you." The president will send an address to the Senate, and then it has to be supported by 2/3 majority in the Senate. You know, when he is going to be appointed, this position is not even specify whether 2/3, just confirm. Once the Senate confirm it, whether they use voice votes or whatever votes, once they confirm it by the Senate, fine, it's good to go. But to remove, this is part of the protection that is needed for that office, so that somebody that is appointed will not just be removed because he's performing his duty diligently. So for the person to now be removed, the Senate must vote, and it must be by 2/3 majority that the person be removed before it can be removed. So that is about the Auditor General. Now, in the public sector, we have different forms of audits. So let's look at some of these types of audits that we have in the public sector. We have the compliance audit, we have financial audit, and we have value for money audit. Now, compliance audit is an audit of procedures. Audits of procedures. We are auditing how the organization performs their duties by complying with relevant laws and regulations that guide the industry where they operate. So if you are carrying out compliance audit on okay, sorry, that was one call I have to pick, sorry. So compliance audit is auditing the level at which an organization is following the rules and regulations that guides whatever business they are supposed to be doing. Okay, so financial audit, on the other hand, is looking at is the one that they defined for us before, that when we are examining the financial statements of the organization, we are looking at their revenues, we are looking at their expenditures, we want to test the expenditure, we want to test the certain elements in their financial statements, whether it shows a true and fair view of the organization, whether it has a faithful representation of what it purports to represent. So that is financial audit. And then value for money audit is looking at a situation where we are assessing certain expenditures based on the outcome that we have on ground. So, for example, you can look at we are looking at a project and the amount of money that has been spent on that project. So the auditors can carry out a value for money audit to see if what has been done on that project actually justifies the resources that has been committed to that project. That is value for money. So they are looking at the economy, the efficiency, and effectiveness of such a project or program. We also have other forms of audit. There's a risk-based audit. Risk-based audit is where we are looking at an organization and trying to assess the risk of the risk that can happen to their operations in the future. So can assess the risk that can happen that can affect their achievement of the achievement of their objectives in future. So if you have an organization, the organization will definitely have an objective for which it was established. So we are now the risk audits. We now look at what are the risks, what are the dangers, what are the issues that may make this organization not to attain the objectives for which it was established. So that is a risk audit. So they will now look at, okay, what are other ways that we can now use to mitigate this risk or to eliminate this risk. That's a risk-based audit. You can also have annual statutory audit. Annual statutory audit is the regular audit that we know that happens at the end of every financial year to look at the financial statement and the operations, the internal control, and everything. The total, the overall audit at the end of every annual year is the annual audit. Then you can have ad hoc or special audit. This one happens once in a while, maybe as a result of one occurrence or the other. The special audit can be called to happen in one organization. For example, when the president came on board in 2015, when issues happened with the governor of the CBN, he instituted a special audit into the activities, the operations of the Central Bank of Nigeria, and gave the responsibility to one forensic auditor, like that. So that's a special audit happening. There's a prepayment audit. Prepayment audit is the audit is usually, most of the time, is usually done by the internal auditors. It's one that happens before payment is made for an expenditure. So they will look at, the internal auditor will look at all relevant compliance before the expenditure is being incurred. So the internal auditor will look at whether the necessary approvals have been gotten for the expenditure, whether the expenditure is aligned with the budget, whether if it is a contract, it will check whether the contract has been duly awarded using due process, and so on, and several other things that need to be checked before the payment is made. And then post-payment audit is one that is usually done after payment has been made. So this one is the one that auditors do, and then they ask you to do retirement of an expenditure. Maybe you are sent on an assignment outside the states or somewhere, and then auditors will say you need to do retirement of the expenditure. So you need to submit your flight ticket as evidence that you actually made that expenditure, or you need to submit receipts for your hotel accommodation and all those stuff. So that's a post-payment audit. Then we can also have interim and final audits. Interim audits is when you want to do annual audits. Sometimes because of the size of the organization, auditors, do interim audits. They will go to the organization and carry out an audit before the end of the year, so that by the time the end of the year comes, they will have little work to just cover up, and that one will be the final audit. So that's interim and final audit. You can also have a management audit, that is when the management itself calls for auditing of certain aspects of their organization, maybe their internal control system and what have you. Then vouching audits, verification audits, operational systems audits. So those are different types of audits that we may also have in the public sector. So briefly, what are the objectives of audits in the public sector? Just like we have in the private sector, is to ensure that all transactions are captured in the financial statement, that no transaction is missed out from the financial statement, confirm that transactions recorded actually occurred and they were relevant to the year of account. So not that in a situation where a transaction that is supposed to be for previous year or future year is being included in the financial statement of the current year. So the auditors are meant to confirm all this and check for issues like this to ensure that transaction values are properly calculated and measured, in line with relevant standards, relevant laws and regulations, and so on. And then the objective of audit is also to confirm that transactions are recorded in line with relevant legislations, and also that transactions have been properly classified and properly disclosed where appropriate. So that is the reason why audit is in place. So many people will be surprised that, okay, why are we not seeing fraud here? So people that are doing auditing, you come across what is known as audit expectation gap. So that's one of the audit expectation gap. People expect auditors to come and find fraud. So actually, the objective of audit is not to look for fraud, except that is the particular type of audit we are having. If it is a special audit, when we want to have a forensic audit. So it is in that case that we know that fraud has actually happened. So we want the auditor to come and look for that fraud and get to the root of it. So except in cases like that, the objective of the audit is not to look for fraud, but is to make sure that the financial statements, the financial records are properly kept, are properly recorded, properly prepared, all transactions are properly captured, and that the financial statement represents a true position of the organization. Okay, so factors that can contribute to an effective audit. And for us to have an effective audit, the most important one, the auditor must be independent. We must have an independent auditor, and the auditor that is not being controlled by an external force or even controlled from within the organization that is trying to audit. The adequacy and scope of the auditor's power is also important for us to have an effective audit. If the auditor does not have enough power to cover every areas of the organization's financial activities, then we cannot have a proper audit. Okay, now the expertise of the professionals, the expertise and professionalism of the auditor also is very, very important, and that of his staff. The auditor must be an expert and must be professional in his job for there to be an effective audit. The resources at the auditor's disposal, they also must have enough resources. That is why it is mentioned in the TOSI declarations that supreme audit institutions must have financial autonomy for them to be able to operate properly. So if the auditor does not have enough resources to carry out audits, then which means he's going to audit as much as his resources can carry him. Let's take, for example, the auditor is auditing an organization that have different offices all over the 36 states of the country, and they need to do verification of maybe some assets. And the auditor does not have the resources to go to all these branches of these organizations to go and verify all these assets. So which means the auditor will now have to base this report on assumption that, okay, maybe those assets actually exist. and these organizations have included those assets in their financial statement. So the auditor cannot know whether they are there or they are not there. So you just have to assume, since he doesn't have the resources to fly all over the country to go and check. So the resources at disposal of the auditor is very important to ensure the effectiveness of the audit work. All right. Also, the freedom that the auditor have to report is also important to determine whether the work of the auditor is going to be effective. The auditor also needs to have unrestricted access. It's not like the auditor will get to an organization and they'll say, hey, these are the accounts you will audit. Okay, what about this other one? No, you don't have business with that one. Or the auditor will say, okay, you said you have so maybe the auditor is auditing an organization that keeps inventory of some items, and then you say, okay, in your financial statement you said yes, you have inventory of goods that is worth 200 million. Okay, can we see the store where you are keeping these goods? And then they say, no, you cannot go to the store. That means the auditor does not have restricted access. Does not have unrestricted access. His access is restricted, and so because of that, the effectiveness of the work of the auditor will be affected. Okay, so next is the steps taken in auditing financial statement. This is also in the this one is in the I want us to go into the study pack and read more on these steps. It includes scheduling and planning of the audits. That is where the auditor will have to go to the organization and schedule when they are going to start the audit with them. After the auditor has been appointed. In the case of maybe a parastatal where an external auditor is appointed, and even if it is the case of a ministry where the auditor general is the one that is carrying out the audit, their staff will have to go to their organization they want to audit and plan and schedule the audits with them. They will issue an engagement letter from the auditor to the organization stating the scope of the work they are about to do. And then when they want to start the audit exercise, they're going to have an entrance conference with the organization. Then the work itself, the regularity of the financial audits will follow. That is when they now sit down and begin to check all the financial records. Then sometimes it will involve field work, where they have to, like I said earlier, where they want to go and verify some assets. Some organizations will say they have vehicles, they have 200 vehicles, and then the auditor will say, okay, where are these vehicles? They say, some is in our one, and 2 of them are in our local office, and 10 of them are in our Buzo office, and we also have 15 in our Port Harcourt office. The auditor may have to go to these places to go and verify. Or they will even say some of them are in the mechanic workshop. The auditor will go to the field and check for some of these things. And then the next thing will be that after the auditor have done all this, they have to draft their reports, and then they will do an exit conference with the organization and say, okay, this is what we have done. This is the report of what we have done. They will show the organization as well. And then the reports will be distributed appropriately to the auditor general, to the accountant general, to the auditor general, and then to the legislature as well. So you can read more on that step-by-step procedure from the study pack. Then, what is the relationship between the Office of the Auditor General and the Public Accounts Committee? The Public Accounts Committee is a standing committee of the legislature. Okay, the legislature, whether the National Assembly or the State Assembly, usually have a standing committee known as the Public Accounts Committee. What is the work of this committee? Their work is they are acting like auditor. They are acting like another auditor to to all public accounts. And what they do is that they liaise with the Auditor General in carrying out his work of audit. So the Auditor General actually does the audit work, but when he finishes his work, he submits the reports to the legislature through the Public Accounts Committee. The Public Accounts Committee will receive the reports, assess the reports, analyze it, and then they will now also give reports on that audit report to the General Assembly. So that is the relationship between the public, what is known as the Public Accounts Committee. So, and whenever the Auditor General is about to experience any roadblock in carrying out its duties. Maybe one organization is not cooperating, or when one public officer is not cooperating with the Auditor General, the Auditor General have the power to report such organization or such officer to the Public Accounts Committee, and this Public Accounts Committee have been empowered by law to summon any organization to the assembly, to their meeting, to their hearing, as they used to call it, to come and clear themselves. Or maybe the Auditor General discovers some fraud or some irregularities in the financial statements of some organizations and sends the report to the Public Accounts Committee. They can summon that organization to come and to say, hey, come and tell us what is happening here. If you remember, there was one public official, I think it was the Director General or something of the NDDC. That was post-COVID, after COVID. That man was invited to the Public Accounts Committee of the National Assembly to come and give account of how they spent money during COVID, and the man was saying they did palliative of was it 4 billion or something like that. Something like that. That man later fainted in that hearing. I don't know if anybody remember. So that's the work of the Public Accounts Committee, and that is how they relate with the Auditor General. All right. So before we go, let's look at specifically internal audit, because what we have been saying relates more with the external audit or the external audit. So let's look at the internal audit very quickly. Internal audit also is supposed to be an independent office, but the difference with the external audit is that the internal audit is resident, is domiciled in that organization. The internal auditor is a staff of that organization itself, but their work is to also review the accounting process and other operational process of the organization. And in one way or the other, they are making the work of the external auditor easier. Their objective is to determine the adequacy of the internal control system. The internal control system refers to the procedures by which organizations carry out their operation. Okay, so the internal auditor aims to determine the adequacy of the internal control system. They also verify financial assets. That is, all the assets that the organization has, that they claim to have, it is the duty of the internal auditor to verify, to ensure that those assets actually exist. They check for adequacy of monthly returns. Monthly returns refers to that report that every organization gives that states maybe every month that will say that this is the amount of revenue we have made, this is the amount of expenditure that we have made. So the internal auditor have the responsibility to check all these returns, whether this organization have reported properly. They also investigate compliance with laws. So if you are the internal auditor, you are in an organization, whether public or even private, and the organization is carrying out operations, it is your duty to be monitoring whether they are carrying out these operations in compliance with relevant laws that guides the operation of that organization. All right, so their work covers prepayment audit, like we mentioned earlier, vouching and payroll. They also cover stock records, stock inventory management, investigations within the organization as well. So, like I mentioned earlier, that one way or the other, these internal auditors make the work of external auditors easier. So we need to look at what are the areas that the internal auditors can assist the external auditors in their work. Okay. Now, one of the areas is in stock taking and cash counts. Now, the external auditor, we know that most of the time what they do is annual audits. And when they do annual audits is at the end of that financial year. They don't have the luxury of time sometimes to do stock taking. Let's look at one public sector organization, for example. Let's say the Ministry of Agri. Let's say the Ministry of Agri is being audited, or maybe not even the ministry, maybe one state agricultural development corporation is being audited. And then this organization claims in their financial statement that they have inventory of fertilizers of about 2 million bags of fertilizer. You know, the external auditor will not have the luxury of time to confirm this claim that is in the financial statement. All right. So it is the external auditor, sorry, it is the internal auditor, which is the staff of that organization who have the time from the beginning of the year to the end of the year and has been working with that organization, that will be able to do this one, to take stock of inventory of the materials that the organization have. Or in cases where the organization operates cash, is very close to the organization to be able to confirm their cash, their level of cash that they have in the organization. So these are areas where the internal auditor will assist the external. So the external auditor will not have to go and start doing counting of inventory in the store if the internal auditor have done that before. All right. Okay, let's another example that comes to my mind is maybe the Universal Basic Education Board or Universal Basic Education Commission or board for a state. And then they say, okay, we are doing free education, we are giving free textbooks to pupils in our state. And we have 5 million copies of mathematics textbooks in our store. That would be difficult for the external auditor to confirm. But once the internal auditor have done that, the external auditor can rely on that record. Payroll audits as well, where the internal auditor will confirm the number of staff that the organization have and that they are paying to. So it is the internal auditor that is easy to do all this. Another area where the internal auditor assists the external auditor is in the area of testing transaction and balances. Balances such as payables and receivables are easier to test by the internal auditor because it's part of the organization. He has been operating with the organization from the beginning of the year, rather than the external auditor that have to be tracing different records. To if the external auditor want to test whether the organization's payables or receivables is correct, you have to go and start looking at all their sales day book to see if to confirm the amount of credit sales or credit purchases that they have done. Then, so however, in relying on the work of the internal auditor, the external auditor also needs to be careful before you rely on the work of the internal auditor. Not just get to one organization and they say this is the internal auditor, and the internal auditor says, I've done these are the work that I've done, and then you just continue to rely on the work of the internal auditor. The external auditor needs to look at the degree of independence of that internal auditor. If the internal auditor is an independent office on its own in that organization, so which means the reports of that internal auditor or the work of that internal auditor is not being influenced by another authority within that organization. The technical competence of the internal auditor himself and that of the staff, the external auditor will have to assess if the internal auditor is actually an accountant, if it's a chartered accountant, if it's somebody that is well trained, and if his staff are well trained, are well educated in internal audit work. He will also look at the scope and the objective of his work before trusting it. So the internal auditor, if the internal auditor's work does not cover store accounting, for example, it means the external auditor cannot rely on him in that area as well, because that is the work of the Lord do. Then due professional care, the quality of the report of the internal auditor as well, and then the quality of his working papers. So these are factors that the external auditor will consider before relying on the work of the internal auditor. Okay. So lastly, we'll be looking at we have engagement. My battery is running low. Okay. So my battery is running low. I think that would be, sorry. Yes. I don't have lights right now. I don't have lights right now. So that will be where we have to draw the curtain for tonight's class. So if there are questions, let's quickly take them before my laptop battery throws me out. So do you have any questions? Let me check the YouTube as well if they have questions. Any questions?
Hello, sir.
Yes, I'm with you.
Yeah, please, sir. Can you just say a little brief about the accountability index? Just throw more light on it, please, sir. Thank you, sir.
The ICANN Accountability Index.
Yes, sir.
Okay. In summary, what the ICANN Accountability Index is about is an assessment of the level of accountability in the public sector, in the Nigerian public sector. So ICANN designed that index to assess the level of accountability and transparency in the public sector. So covering areas like their budget process, how do they do their budgets in a transparent manner, and then do they follow their budget in the actual execution of their expenditures. They're also covering the quality of their audit reports, also covering the timeliness of their financial reports and their audit reports, and also covering whether the recommendations in their audit reports are being followed by the legislature who receives the reports. So I can design that thing to assess every government based on that, to see if these people are actually accountable, if these governments are actually accountable to the public. And the way they do, the way they determine whether they are accountable to the public is by testing every government with that, with those index. So the index includes assessment of whether they are being transparent with their budget process, whether they are being transparent with their financial reports, whether they are being transparent with their audit reports, whether their audit report is quality, whether their audit report is timely, whether the recommendations are being followed. So that's whether they have proper asset management. In fact, it includes some assessment of whether they have asset register, whether they have been managing their assets properly, and so on. So that is what the accountability index is about. So when they do this index, when they do this, the way they do the index is that they will use these different assessments to assess every government, and then they will give them a rating on each of the assessment, each of the 25 indicators that they use to test them, and 70 dimensions. They will give them a rating, and after giving them a rating, they will now look at they will now rank these ratings and then see which states have the highest rating, which states have the next rating, and like that. That's how they do the ranking. There's a website. ICANN has a website specifically for this thing, where you can go in there check for what this index looks like. I think it's icanai.com.ng. Yes, I think so. icanai.com.ng. Let me put this in the comments. So if you go to ican, you go to ican AI, www.icanai. It's not artificial intelligence. .com.ng. Their one is accountability index. So if you go to icanai.com.ng, you can even download past indexes, past reports of the accountability index. Jane, please go ahead with your question.
Okay, good evening, sir. So I want to
Good
ask,
evening, Jane.
yes, if an organization is outsourcing internal audit, can the external auditor
Yes.
rely on everything is given to him or her?
By the internal auditor, right?
Yes. Not the
By an
internal
internal,
auditor is being outsourced by the company.
the internal auditor, the company outsource their internal audits
Yes.
functions.
Yes.
Okay. So you are now saying, can they rely on?
Can the external auditor rely fully on what the internal auditor is given?
Yes, whether the internal audit is being outsourced or not, as long as the external auditor can consider the factors that we mentioned earlier, and that internal auditor is able to pass those factors, then the external auditor can. One thing that is very sure, it is that whether willingly or unwillingly, the external auditor will be forced sometimes to have to rely on the work of the internal auditor. That's why we mentioned earlier the areas where the internal auditor assists the external auditor. There are some things that the external auditor cannot be able to do because of time constraints, because they have to give their reports. There's a timeline for them to give their reports, and because they are not because of the volume of the transactions of that organization, they may not be able to actually test some transactions by themselves or do some verifications themselves. They have to rely on the internal auditor. But like we said, they have to consider those factors. They have to test the internal auditor with those factors. Is that company, that firm that the internal audit function being outsourced to, are they competent? Is it a firm of competent accountants? Are they also carrying out their duties independently, such that they are not being controlled by any external force within or outside the organization, and so on? So they will also look at their working papers. There's something in audit that's known as working papers. That is the work that the auditor is doing. There are some records that they keep with it. So the external auditor will look at the quality of the working papers that the internal auditor keeps, and if they pass that, then the external auditor can go ahead and trust their work.
Okay, thank you, sir.
You're welcome.
I have a question, sir.
Okay.
Sir,
Please go ahead.
okay, we are talking about public sector auditing, right?
Okay, yes.
Okay, sir, in the public sector, for example, let's say in a government settings, let's say ministry, for instance,
Okay.
in the situation whereby auditor unit is an independent unit, like rightly said earlier in your lecture.
Okay.
In a situation whereby the normal statutory audit that they normally used to do it annually, sometimes when they comes, they will ask all store, finance, loans and advance, and every unit that has involved with government property need to submit their book to them.
Yes.
And sometimes they will not even request the record from the audit to submit their own aspect. They will rely on those documents that have been submitted from budget, from loan and advance, from cash advances, from store, drivers, and some other things. So I don't know which internal audit report will the external auditors rely on, sir, in a government settings?
It's still the same ones that we have mentioned, that the areas that the internal auditor can assist the internal auditor. But in the cases where the external auditor did not request anything from the internal auditor, that is probably because the external auditor have assessed the internal auditor and have seen some reasons why they don't want to trust the work of the internal auditor. That is why they are not relying on anything from the internal. That's why they didn't request for anything from the internal auditors. That's probably.
Okay, sir.
So because
Thank
they
you.
are not actually compelled to they are not compelled that they must rely on the internal. They can do their work if they believe that they can do it without relying on the internal auditor. So there's a question here from YouTube I want to take from Adekola Tosin, saying that what's the criteria for the appointment of internal auditors? Now, internal auditors are staff of the organization. Most of the time, they are staff of the office of the accountant general. So they are appointed by the accountant general to serve as internal auditors in those organizations, especially in ministries and extra-ministerial departments. They are staff of the accountant generals that are there acting as internal auditors. In the case of parastatals, they are sometimes employed by the organizations themselves as internal auditor. So that is how those internal auditors came to be. So most of the time, they are staff of the accountant general appointed there as internal auditors. And then another one also from Adeni Tunu said, how can we measure the independence of an internal auditor in the case of private sector and even public sector? Okay, the independence of an internal auditor, the way you measure it is by looking at the level of control that the internal auditor is usually subjected to. That is there any other authority that controls that internal auditor? For example, if you get to an organization as an external auditor, and then you ask for their organogram, one of the things you ask about the organization, you say, okay, you want to see the organogram, and then in the organogram, you are seeing that the internal auditor is being placed under the director of finance and accounts. What it means is that the internal auditor is reporting to the director of finance and accounts. So in a situation like that, how can you be reporting to somebody and then you are auditing somebody and it's still that person that you are reporting to? It doesn't work. You cannot be under me as my subordinate, and then you are auditing me, and then you now still write reports that I'm doing something wrong. So that is how the internal auditor would know the level of independence that the internal auditor was. If the internal auditor, according to the organizational structure, enjoys direct access to the management of the organization, it means the internal auditor is independent of any other influence or control. So he has direct access to the management. So if it is a ministry, it means the internal auditor will have access to the permanent secretary. If it is a parastatal, it means the internal auditor will have access to maybe the director general or the vice chancellor if it's a university and so on. So that is how you know the level of independence of an internal auditor. So I'm going to take one more question, one last question, and then we close the class for the day because my battery is already almost out. So any other question before we close the class for the night? Okay, so in the absence of, since we don't have any other question again, I believe, let me call in Mr. Tokpe to stop the recording. Okay, Mr. Tokpe, are you online? So we are officially done with the class for tonight. I will meet again next week, Wednesday, God willing. Thank you very much for joining me.
Thank you, sir.
Thank you, sir. Thank you, sir.
Thank you, sir.